Dear students, we will do module 95. In this module, I will explain about 4 deductions from gross total income. First is section 80E, 80TTA, 80TTB and 80U. And one problem I will be doing in this module, and I will be making a comparison between sections 80TTA and 80TTB. So we will go into the details. So first one is section 80G. It's very relevant for the students, those who are going for higher studies. We know that educational loan is quite popular. So this is helpful for those who have taken educational loan and those who are repaying the interest. So section 80E, conditions for claiming deduction under section 80E. This is for repaying the interest of educational loan availed by the assessee for his son, children, all these conditions we will learn. So assessee has to be an individual only can claim this. Now this deduction is only allowed only if the assessee opts for the old tax scheme. Then under the new tax scheme, this deduction is not available. This deduction is allowed if the assessee has taken a loan to pursue higher education of his own. That means he himself has taken an educational loan, or his spouse, children or any other student for whom he or she is a legal guardian. Now, conditions for claiming deduction under section 80E. Loan has been taken from any financial institution or an approved charitable institution. Assessee has paid interest on that loan during the relevant previous year. Please remember that principal amount repaid is not eligible for deduction. Now the interest is paid out of assessee's taxable income. So you have to remember, some cases if they are paying out of exempted income, they cannot claim this deduction. Now what is the amount of deduction? The entire interest is deductible. Now in the previous year in which assessee started paying interest, and this will continue for 7 subsequent years. Say for example, if 2024 they started paying, for next 7 years they can claim that deduction. And remember, only the interest repaid, not the principal amount. We will make clear this with the help of an example. Compute the amount of claim Mr. A can claim as per the old and new tax schemes. Mr. A has taken a loan from ABC Bank in 2024. He started repaying the loan from 1/4/2024. The principal amount repaid in the previous year 24-25 is 30,000. Interest amount repaid in the previous year is in the year 24-25 is rupees 28,000. Now the question is, under the old scheme what will be the claim, and under new scheme what will be the claim assessee can claim. So under the old scheme we have to remember only the interest, that is 28,000 assessee can claim. Under the new scheme he cannot claim anything, because under the new scheme this section or this deduction is not available. Now second section I am going to explain, section 80TTA, deduction in respect of interest on deposit in savings account. So who all are eligible? Individuals below 60 years and HUFs are eligible to claim this deduction. Not senior citizens and HUFs, Hindu undivided families, can claim this. Now this deduction is available only under the old tax scheme. If the assessee has opted for new tax scheme, this exemption is not allowed. Now, eligible deduction. Interest on savings account with a bank regulated by the Banking Regulation Act 1949. So, if you have savings bank account interest, then it will be eligible. Or from a cooperative bank or from a post office savings deposit. That is a post office as defined under the Indian Post Office Act 1898. Now actual amount of interest or rupees 10,000, whichever is less, is eligible for deduction. See for example, the interest is 7,000, that meaning 7,000 or 10,000, whichever is less. That means assessee is eligible for 7,000 rupees deduction. Now twin benefits in respect of interest on savings bank account for the post office. So here you have to remember, under section 1015I, interest on a post office savings bank account is exempt up to rupees 3,500 in the case of an individual account and rupees 7,000 in the case of a joint account. So this we have explained in the case of problems also. So you remember, 3,500 interest from post office savings bank account for individual accounts is exempt. If it's joint account in the name of husband and wife, up to 7,000 is exempted. Now interest on post office savings bank account can be claimed along with the bank interest up to rupees 10,000 under section 80TTA. So post office savings bank account, twin benefits are available. Now next thing, Next section, section 80TTB. 80TTA and 80TTB are related sections. So deduction in respect of interest on deposits with banks and post offices and cooperative banks for senior citizens. So first thing you have to remember, 80TTB is for senior citizens. So this deduction is allowed only for senior citizens. HEFs are not coming in this section, in this eligibility. Now this deduction can be claimed only if the SSC opts for the old scheme. Now deduction under section 80TTA and 80TTB cannot be claimed simultaneously by the SSC. Only one section he can claim. Now deduction under section 80TTA is not available for the senior citizens. Now this deduction can be claimed for savings bank, recurring deposit and fixed deposit. So the main difference between section 80TTA is 80TTA only savings bank interest from banks, cooperative banks and post offices are included. Whereas in the case of 80TTB, all types of bank accounts, savings bank, recurring and fixed deposits are included. Now what is the amount of deduction? Rupees 50,000 is allowed as a deduction for the senior citizens for interest on saving bank deposits from banks, post offices and cooperative banks. Now comparison between section 80TTA and 80TTB. So first one is eligible taxpayers. 80TTA is allowed for individuals below 60 years and Hindu undivided families, whereas section 80TTB is allowed only for senior citizens, that is 60 years or above. Second is type of income. 80TTA interest on savings bank accounts are only eligible, whereas section 80TTB interest on all bank deposits, savings, recurring and fixed deposits are allowed. Third is types of deposits covered. Say in the case of 80TTA, savings account in bank, post office or cooperative bank is allowed. 80TTB, savings account, fixed deposits, recurring deposits are allowed. Maximum deduction, 80TTA it's only up to 10,000, 80TTB up to 50,000 is eligible. Now applicability, section 80TTA is applicable for non-senior citizens. 80TTB is applicable for only for senior citizens. Now we will come to the fourth section, section 80U, deduction in case of a person with disability. This is allowed only to resident individuals. Please remember the condition, resident individuals. Now this deduction is allowed only if the SSC has opted for the old scheme. If the SSC has opted for the new scheme, it is not available. This deduction is not available. Now this deduction is allowed for medically handicapped individuals. Now the SSC claiming this deduction should submit the medical certificate from the prescribed medical officer or the medical practitioner. Then low vision or blindness, hearing impaired, intellectual disability, mentally ill or locomotive disability are broadly called as medically handicapped. Now rate of deduction under section 80U. The eligible SSCs will get rupees 75,000 as a deduction. But if the SSC suffers 40% or more than 40% disability, then the higher deduction of rupees 1,25,000 is allowed. So this is what I wanted to explain in this module. Happy learning. Thank you.